Welcome back for another report on the gold market. Gold's price stabilized in the latest sessions after performing an impressive run in the previous 3 consecutive weeks, moving upwards. Gold's price action in April and especially May has been extraordinary for the buying side, and the yellow metal has managed to change the continuous downward slope its price was in since August 2020. This report aims to help gold traders relate to some of the most important fundamentals and economic events at the moment, while our technical analysis will assist in identifying important levels. First of all, the great adversary for gold is the greenback, which continues to be on the back foot for most of the part of the past months. Today, the dollar index fell to levels previously seen in July 2020. This could be an indication that the improved economic circumstances in the US are not supporting the value of the US dollar, which consequently are lifting the more risk-averse gold to new monthly high prices. For example, the US preliminary market manufacturing and services PMIs released during the 21st of May were better than expected. We note most importantly the US services PMI for May, which saw a significant increase. Another significant development in the US that can create market waves was the release of the Fed meeting minutes in the past week. Many market participants and analysts sensed the Fed may be willing to reconsider easing policies if the economy continues its rapid improvement. With the current recovery in place and the pandemic weakening, an interest rate hike may have an unknown impact on gold's price. Yet in our opinion, it will definitely have some impact on gold's volatility. In any case, the gold market has not reacted considerably to the news, and this can be used as a warning for the analysts and traders to keep an eye out for the next Fed meetings. On a separate note, a large number of reports in the media suggest the market is concerned over the rising inflation in the US. A report by CNBC suggested that a number of Fed officials is not drastically worried over the matter, as the rise of inflation can be a result of temporary factors that could change or resolve in the following months. However, Kansas City Federal Reserve President Esther George called for different inflation and employment dynamics than once seen in the last few years, implying the situation at the moment may require a different approach or consists of fundamentals new to us. In our opinion, this view is rather pragmatic and continues to produce a level of uncertainty that may have been subdued previously. In the current week and in the next, a number of important financial releases will be announced that could possibly be of great interest to gold traders. On the 27th of May, we get the second GDP estimate for Q1, the preliminary core PCE prices for Q1, and the weekly initial jobless claims figure, all adding up to a rather interesting and possibly active day for gold. On the 28th, we get the US consumption adjusted and the core PCE price both for April. Finally, on the 1st of June, we get the ISM manufacturing PMI figure for May, which is usually a rather considerable reading for the economy. Moving now to the technical analysis in gold's 4-hour chart. Since the 17th of May, gold has been moving in a sideways motion within our S1 1860 support and the R1 1885 resistance. In our opinion, whichever one of these two levels is breached, the further direction of the price action will follow accordingly, underscoring the importance of both lines. To the upside, we have noted two levels above the R1, first the R2 1905 line, and higher the R3 1925 level, which were both seen back in January 2021, suggesting new yearly highs. However, as noted, the biggest challenge for the buyers at the moment remains the R1. From a selling perspective, below the S1 1860, we have noted the S2 1840 level that has been tested earlier in May as a resistance, but was breached eventually. Lower, we have set the S3 1815 hurdle that was tested nearby the mid of May, but the level held up and the price action bounced off it. The RSI indicator below our chart seems to be turning upwards, yet the latest sideways movement seems to constrain it during the past week until now. We hope that you found the report useful, and if so, please do not forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.